Home sellers are calling it quits. The number of people taking their homes off the market is up 47% from a year ago. Buyers are not willing to pay what these sellers think their homes are worth, and sellers are showing they'd rather take their homes off the market than sell for less. And as a result, housing inventory is now dropping. And we actually had less new listings come to market this week than we've had in the last 4 years. So it's not just people taking their homes off the market, it's also less people listing. And at the same time, the number of people applying for mortgages getting ready to step into the market saw a huge jump this week, and we've got more people applying for mortgages than we've had in years. In fact, 25% more people are applying for mortgages now than last year. Are we about to head back to 2022 where we had way too many buyers for too few houses? I actually think, and I never say things like this, but I think if you are a home buyer, this might actually be the best chance you have to buy for many years to come, and I'll explain why in a minute. So we'll be covering all of this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas-Fort Worth area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button, and if you're looking to buy, sell, or invest here in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is July 14th. Let's see what the data is telling us, and if this is an old video, you can click the playlist here to get to the latest weekly market update. Okay, starting with market news, home sellers are giving up on this market. Here we're looking at a recent article from Realtor.com, and you can see in the headline, delistings surge nearly 50% as sellers who can't get their price quit the market in frustration. After failing to find a buyer at the price they think they deserve, more home sellers are pulling their listings off the market altogether. Delistings jumped 47% nationally in May from a year earlier, in a sign that sellers would increasingly rather wait than negotiate. Scrolling through this, it looks like 13 homes are being delisted in May for every 100 homes that hit the market. The increase in delistings follows a surge of price reductions as some sellers with unrealistic price expectations faced a softer market with limited buyers. So nationally, 13 homes delisted for every 100, but in Phoenix, that ratio was 30, the highest in the nation. So Phoenix, and it looks like Miami as well, are having 30 homes come off the market for every 100 that list. If you look at Dallas, we're probably somewhere around maybe 5 or 6% of homes are delisting. But if you look down at Houston, that's way up here, maybe like 15% of homes delisting. So here's what we can gather from this. First of all, what you need to know as a home seller, your home is never worth what Zillow says, or what your neighbor sold for, or what your neighbor's home sold for, or what your other neighbor who has currently been sitting on the market for 60 days is listed for. Your home will only ever be worth exactly what a buyer is willing to pay for it. So sellers, if your home is sitting on the market, listen to the feedback from home buyers. If you've had 3 people offer you $50K below the list price for your house, then you can be pretty sure you're overpriced by $50K. The most interesting thing about this, and what all of the people who are saying high inventory means we're gonna have a price crash are missing, is that these home sellers are not distressed. If they don't get their price, they'll simply take it off the market. Just because we have high inventory doesn't mean everyone is going to accept low offers. Some people will, because there are going to be some forced sellers for one circumstance or another, but the majority of people are not distressed. And a market crash happens when everyone is forced to accept a lower price. But sellers today have more equity in their home than any other point in history. And they've got 2.75% mortgage rates with crazy low monthly payments. In fact, they already don't want to have to buy another house, give up their 2.75 rate to take on a 7% rate. So if nobody gives them the price they want today, it's no big deal because they were already looking for a reason not to sell, so they don't have to go buy at 7%. So they're going to be happy to stay put. Which brings me to my next point, and I don't say things like this often, but if you're a home buyer, I really think this might be the best time for you to buy. We're currently sitting in the perfect storm of trade wars, high mortgage rates, and high inventory, where there are enough home sellers who are scared and willing to take low offers. Meanwhile, you can also see the surge of people applying for mortgages. So you see that home buyer demand is returning, and you don't want to wait until it gets back to normal demand to then step into the market. You want to buy while demand and competition is low. You also know that a year from now, mortgage rates are for sure going to be lower. Powell will no longer be the Fed president. Trump has made it very clear that he wants someone who is going to cut rates yesterday. And if you're scared that a price crash is coming, you can see it right here. If sellers don't get their price, they're just going to take their home off the market. These are not distressed sellers. And the economy is still so strong. In fact, that's the only reason the Fed hasn't cut rates already. Unemployment is still too low, and inflation is all the way down to 2.1%. This is a strong economy. So a year from now, the trade wars are going to be resolved, the jobs market is still going to be strong, mortgage rates are going to be lower, which means more people are going to be buying houses, and you're not going to be seeing the price cuts that you're seeing today. And specifically, if you're looking to buy new construction, builders right now are giving insane incentives. Like I told you last week, there are a ton of communities around the Fort Worth metro that are literally paying your down payment for you, so you can buy a house with literally $0. And they're giving you a 5.75 mortgage rate. Because right now, at this point in the year, builders are about to finish their fiscal year. So for the next few months, they're trying to sell as many homes as possible, and they're giving discounts, they're giving incentives. So I'm telling you, this is a really great time to buy. So if you've been waiting on the sidelines the last few years, I think this is about as good of an opportunity as you're gonna have. And if you think you're ready to start your home search, or you just wanna talk through what you would be able to afford today, just call me. I'm happy to talk you through it. Then before we move on, if you're an investor, this home is an incredible deal. I've sold this plan several times to investors in this community. It is a great rental property. And they have one right now at the cheapest price I've ever seen for $325K. That is crazy cheap, and I literally just rented this exact plan in this community for $2,575 a month last week, and it only took me about a week to get it leased out. So with those numbers, you'll have about $175 a month of cash flow on a brand new property in a fast growing area. So this is a killer investment property. If you want it, call me right now. Okay, moving on, we're starting with the national housing inventory. This week we actually had a decrease, as we've been talking about, of 6,347 less homes for sale in the country. Now, one thing you need to know is we are still going around the 4th of July holiday week. Anytime we have a holiday like that, the data is skewed the week before and the week after. So this week we're covering the week after the 4th of July, so you can expect the data is gonna look weird. We're gonna get a much better picture of what's actually going on next week. So keep that in mind for everything you're about to see. But as of now, we had a decrease of 6,347 homes for sale in the country, which drops us 1% down to just having 30% more inventory than we did last year, to a total of 846,833 homes available for sale in the country. This same week last year, inventory was only at 651,453. So we're still much better than last year. We have 30% more this year. Then for reference, the all-time inventory bottom down here in 2022, we only had 240,000 homes for sale. The peak of last year, we had 739,000 homes for sale. Now we're looking at new listings. This is the really weird one, because as you can see, normal would be 4th of July week, we have the big drop, which we did have last week, and then we would expect to bounce back up. So usually it's 1 week down, 1 week up. You can see this every other year, except this year, we went 2 straight weeks down, and we actually are below all of the previous years. 22, 23, and 24, we had less new homes listing. So that's definitely weird, but again, we're still around a holiday week. Let's wait until next week to see, but that's not happened in the last 3 years. So this week we had 8,974 less new listings than last week, for a total of 60,726 new listings this week. So hopefully this does bounce back up next week, because the last thing we need is for people to stop listing homes entirely. Okay, now we're looking at pending sales. Pending sales, obviously, they're just going to be trending down for the rest of the year. The market is going to be cooling off from here on out. But this week we had 6,066 more homes pending than we did last year. That's this little gap, for a total of 387,590 homes pending in the country, which is 9,062 less than we had last week. Then looking at the weekly pending sales, you can just think of this as new contracts. And this week, new contracts decreased by 5,824, though we still have more than we had a year ago. And you can also see it is normal around this 4th of July holiday for these weeks to be down weeks. And then again, we would expect a bounce next week as things get back to normal. But as of now, still declining, but still higher than last week, with 6,143 new contracts. Then the last thing we cover nationally is a percentage of homes having price decreases. Every year, it's normal for a third of homes to take a price cut before selling. Looking at the national chart, after after a few flat weeks, we climbed just 0.1% this week. It was pretty flat again to 40.7% of homes taking a price cut. And as you can see, this year's trajectory is following pretty closely to 2024, just started a little bit higher, but the slope has been pretty similar. So I don't know how much higher this is actually going to go. I would actually expect it's going to start flattening out. It's probably going to follow just this trajectory all the way through the year. But last year we got as high as 39.9, so we're a little above that now at 40.7. The year before we got as high as just 39.2, but then in 2022 we got as high as 43.2. And just know, if you want home prices to come down, this number would have to continue up. And you see this bright red line from last year, the similar trajectory we're following. This level of slope equated to a national housing price increase of about 4.5%. So we can know, since this line we're having more price cuts, we're definitely going to have less than a 4.5% price increase this year. And if I had to guess, I would say it's going to be less than a 2% increase. I think we're going to have a very flat year price-wise. Okay, moving on to mortgage rates. We started the week at a 6.79 and we ended at a 6.82. No big changes last week. But the real big change is looking at the mortgage purchase application index. This just tracks how many people are applying for mortgages, and this data is used to forecast what things are going to look like 30 to 90 days from now, as that's how long it takes people to contract or to close. So a couple of months from now, all these people are going to be closing. So a couple months from now, we can definitely expect to be having more sales than we are now. But this massive gap between these two is a 25% year-over-year increase in the number of people applying for mortgages, which also gives us 20 straight weeks of positive year-over-year growth. So again, as I'm trying to tell you, more people are going to step into this market and buy houses. You do not want to wait till this number gets way up here back to normal demand. And I don't think that's going to happen until mortgage rates get at or below 6% for a sustained period of time. But just look, mortgage rates have not even dropped. We're still at 6.8 and this many people are applying. When mortgage rates are at 6, this many people are going to be applying, and you're going to be competing with a lot more buyers. And we're not going to be seeing the price cuts that we are today. And that's going to happen sometime between now and a year from now. Okay, moving on to the local markets. We're starting with the MLS data of Dallas County. And remember again, this week is still going to be skewed by the 4th of July holiday weekend. But we had an enormous 682 new listings in Dallas County. That's 218 more than last week. So you can see 664, 640, holiday got us all the way down to 464. Then we jumped right back up to 682. Look at how weird things get around the holidays. Minus 176 to plus 218. And that's after 1, 24, and 24. And then closings, we had 290. That's 77 less. But you can see again, last week, the closings remained about on par with everything. This week, around a holiday week, we dropped to 290, 77 less. Of the homes that closed, 55 were immediate sales, meaning they contracted within the first week. That's 16 less than the week before. We had 254 new contracts, that's 17 less than last week, and in total, there are 2,223 homes either under contract or pending. That's 8 more than last week. Now moving on to Collin County, we had 591 new listings, that's 116 more than last week, 256 closings, that's 8 less than last week. Of the homes closed, 49 were immediate sales, that's 1 more than last week, 240 contracts, which is 47 more than last week, and in total, there are 2,045 homes either under contract or pending, and that's 46 more than last week. Now we're moving on to the Market Action Index for Dallas County. If you've never seen this, it takes into account all this data, puts it into one easy to read graphic with a number. Anything a 30 or below is a buyer's market. Above a 30, we're asking how much of a seller's market are we in. All we're using this for is to look at, are things looking weird? Is there anything we should be concerned about, or are things looking normal? What would be normal this time of the year is that things should just be cooling off for the rest of the year. We should expect that prices are going to be coming down. We should expect days on market going up. And as of now, Dallas County is still a 36, which is just a slight seller's advantage. Median list price finally did have its drop that we've been expecting. So we've been around 430 for about a month. We finally dropped below that to about 425. Median price of new listings as well finally fell out of this up and down range to 375. So those are normal things that should be happening now. And I get the question a lot, well, it's still summer, shouldn't prices be going up? No, prices always peak about the end of May. That's when the most people buy because they want to move in the summer. If you're just now contracting mid-July, that means you're going to be closing mid-August. So people want to move way before mid-August. They want to move way before school starts, so they contract. The most people contract at the end of May. Average days on market remained flat this week. Median days remains flat at 56 as well. Homes having price decreases, very little change there. It did go up a tiny bit. Inventory, just like nationally, it had a drop this week, but that's probably just 1 week data due to the holiday. I would expect that's going to continue up. And of course, the market action index is just continuing its slow trend down. So everything's looking normal here for this time of year. Now let's move on to Collin County. Collin County prices have still not come down. They've been stuck at 550. I don't think it's going to be long before it starts to come down like Dallas, though. At least the median price of new listings as well has fallen out of this range. So new listings are starting to reflect that cooling market. Average days on market climbed by 2 days. Median remains the same at 49. Price decreases has been flat for a couple weeks, though they are quite a bit higher than Dallas already. Inventory has been pretty flat for a couple weeks, and actually this week it came down a little bit, just like nationally and in Dallas. And their market action index is a 34. You can see it's definitely cooling off, but yes, just a slight seller's advantage. So everything's looking nice and normal here. Let's move on to the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. And these are ranked using that market action index number we just discussed. The absolute hottest city remains and has been for a while Grapevine, Texas at a 44.04, and then Coppell heats up 1, Grand Prairie heats up 3, Lancaster cools off 2, Duncanville heats up 2, Richardson cools off 2, Carrollton cools off 2, Louisville remains at number 8, Hutchins heats up 1, and Garland cools off 1. Then we like to zoom into specific zip codes. The absolute hottest is Dallas 75253, Irving 75061, Grapevine 76051, Richardson 75082, Lancaster 75134, Grand Prairie 75051, Coppell 75019, Dallas 75241, Grand Prairie 75052, Carrollton 75007, and the coolest of these is a 41.81 all the way up to a 46.43. So if you have a home in one of these zip codes, you should be able to sell for top dollar. Now moving on to the coolest cities and zip codes. For the first time ever, Rockwall, Texas takes the coolest city. It cools off 1 spot. It's all the way down to a 28.24. Remember, 30 or below is a buyer's market, followed by Whitewright, which cools off 1. Then Blue Ridge heats up 2. Van Alstyne cools off 1. Leonard heats up 1. Then Salina, Royce City, and Lavon all remain in their same spots. Anything above Salina, those are officially the buyer's markets. These bottom 4 are slight seller's markets. And then Anna, Texas jumps on at number 9, and Sunnyvale jumps on at number 10. And then Nevada and Prosper, which were 9 and 10 last week, heated up off the list. Then looking at the coolest zip codes, Dallas 75204 is the absolute coolest at just a 24.98, followed by Dallas 75254, Rockwall 75032, Wilmer 75172, Whitewright 75491, Blue Ridge 75424, Rockwall 75087, Van Alstyne 75495, Leonard 75452, and Dallas 75235. Remember, if you're looking to buy, sell, or invest in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. Thank you for watching. I'll see you in the next video.